What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode will be your stock market technical analysis update. Before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we're looking at the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so with today's price action on the SPY ETF, we see another bullish close with the SPY going up 0.89%, and we finally have that daily higher high on a closing price on the daily chart. So now that we have that daily higher high closing up at $343, and we did need that close above $342, that makes us medium term bullish. And right on cue, you can see that the 20 simple moving average, which is the white moving average on the chart, is starting to turn positive. So everything's going exactly as planned, and the technicals and the price action never lie. So we knew we had that bullish trend because we have that 5 EMA still trading above the 13 EMA, and we were consistently getting price action closes above that 20 simple moving average. So it is worth noting that now that we have a daily higher high, it would be completely healthy to get a pullback into support and then a bounce to start forming new higher highs. So remember, a bull market is formed by daily higher highs and daily higher lows. And this market has really just been ripping, only getting about a 1-day pullback while we've had this impulsive move to the upside. So it would still be completely normal and completely healthy to get a 2 or 3 day pullback before resuming this upward bullish trend. Now we are breaking above an important resistance level, and we do know that when resistance levels break, they could act as support. So we could see further price action move to the upside, and then we could see a bounce and retest of that resistance level as support and a continuation to the upside. However, we are in a bullish trend, and we do know in a bullish trend that our moving averages could act as support. So I'm looking for the 13 EMA to act as support because we do see that the 13 EMA acted as support back on October 6th. And if we see previous support levels, we know in the future that those levels could also act as support. But the number one thing to watch for on this chart is we want to maintain this bullish trend, and as long as the trend is bullish, we want to be buyers off of support levels. So if you have not already bought into this market, your best opportunity to buy into the market is going to be on the next pullback and wait for that bounce off of a support level. So like I always say, you don't want to FOMO into the stock market, and you don't want to chase something that's going up in a straight line. So remember, our first opportunity to be a buyer is when this trend went into that bullish trend back on October 1st, and we saw that 5 EMA cross above the 13. And then we got this beautiful pullback into the gap, which would have been a great opportunity to start accumulating a position. We knew the trend was bullish, and we want to buy off support. And now that we're getting bullish closes and that bullish trend is picking up momentum, it makes the medium term trend also bullish, which means we could start buying onto the dips and holding for longer term position sizes, knowing that that trend is bullish, it's biased to the upside, and we're likely going to make a profit off that trade. So this is the perfect setup for a bull, and you want to see these higher highs on the daily chart to let you know that it's not just a bearish rally. So one thing to note about the stock market right now, it's behaving very technically sound. Ever since we had this ABC correction, we expected to see that bull rally continue, and we're starting to get confirmation that that bull rally is continuing. So when you're following the technicals and the price action, and you're getting those sound confirmations with the technicals, there's really no reason to have fear in this market right now. That doesn't mean there's no risk in this market, but you mitigate your risk by knowing your buy levels, and you could always set your stop losses below support levels. So as a bull, we have bullish price action confirmation with bullish trend confirmation. All of the moving averages are now stacked in the bull side, and we are getting a short-term bull trend that's turning into a medium-term bull trend. And if we zoom out, we know we're in a long-term bull trend. So there's no reason to be a bear. There's no reason to be shorting this market, and there's no reason to be scared of this market right now. This daily higher high was such a critical thing that we needed, and we still could get a 2 or 3 day pullback into these support levels and still have this very bullish trend. So next up, let's go ahead and take a look at the Nasdaq 100, and we're looking at the QQQ ETF, and we do see the Nasdaq 100 closing right above that resistance level. So we did get a break above resistance, and we did close right on that resistance level right around $282. So the Nasdaq 100 also has bullish trends. We see all the moving averages stacked in the bull side with the faster moving averages above the slow ones. And we do have price action closes above the 5 EMA, with the 5 EMA trading above the 13. So overall, we have bullish price action and bullish trends, and we have plenty of support levels below us all the way down to the gap closure at $272. So we're bullish on the S&P 500 and we're bullish on the Nasdaq 100, and we want to be buyers of the dip and we want to buy off support levels. So look for the 5 EMA, the 13 EMA, and the 20 EMA to act as support, and we could break all the way down to the 50 EMA and the gap closure at 272 and still have that daily higher high and a daily higher low. So don't be afraid to buy on support, and don't be afraid to start accumulating a long position. Next up is the Dow Jones, and we're looking at the DIA ETF, and we see the Dow Jones also closing at a daily higher high, taking out our previous resistance level. So the Dow Jones is looking very bullish, and we see that 5 EMA breaking well above the 13, and we are starting to see that 20 simple moving average begin to get more positive sloping upward. We see the 50 EMA also sloping upward, and we do have nice support levels right around the 13 EMA, which I would expect bulls to be buying these dips because of how strong this bullish trend is. So all three indices are bullish. We have bullish price action with bullish trends, and we're bullish in the short term, medium term, and the long term. So there's really no bear case that I can see in this market right now. And that is a great opportunity as a trader to follow the price action and follow the technicals, because they're showing us that this is a great buying opportunity. So next up, let's take a look at the VIX, which is our fear indicator. And we see the VIX going down over 6% today. So we are seeing fear leave the market as we go to these new higher highs on the stock market, which is exactly what we want to see. We want to see fear leave the market as the market goes higher. And we want to see the VIX keep closing lower and lower and eventually get all the way down below 23.5. If the VIX keeps going lower while the stock market keeps going higher, that's only making us more and more bullish on this market. And the lower the VIX goes, the higher we expect to see the stock market go. So right now the VIX is breaking out of its bullish trend, and it did fail to form a higher high on the daily chart. So overall, the stock market's forming higher highs and the VIX is not, which is telling us to expect those new highs. So let's check in on the sectors driving the stock market. And first up is the financial sector. And we see the financial sector looking very bullish today, closing back above our resistance trend line for the first time in a long time. If we zoom out here, you see the financials were stuck in this consolidation wedge, and this resistance trend line was suppressing the price of the financials. Well, with today's price action close, we did close above that resistance line, and you can see how strong this bullish trend is developing. The 5 EMA is trading well above the 13 EMA, and all of the moving averages are aggressively starting to slope to the upside. So the financials have an absolute V-shaped recovery ever since the bottom at the end of September, and we are getting confirmation that the financials are going to a bull market. We are getting a daily higher high on the financials. As you can tell, today's price action is a higher pivot, and we do have a higher high. So now we just need to come down here and form a higher low and continue this bullish rally. So remember, we wanted to see the financials break out into a bull market to get more bullish on the S&P 500, and that's exactly what we're seeing happen. Next up is the industrials, and we see the industrials also looking very bullish, closing back above to a new all-time high, taking out that previous resistance level. You can see that the trend is bullish with all the moving averages stacked to the bull side, and we know the price action is bullish because we just formed a new 52-week high. Next up is the healthcare sector, and we see healthcare still looking bullish, closing well above its resistance level today, and we are seeing the bullish trend strengthen. So all the sectors are looking bullish, and all of the indices are looking bullish. The S&P 500, the Nasdaq 100, and the Dow Jones are all heading higher, and that makes us want to be a buyer of the dip. So if we get those 2 to 3 day sell-offs, we want to buy off those support levels, and we want to ride the stock market to higher levels. Let's take a quick look at the US dollar, and we see the dollar struggling to hold up above our support trend line. And we know as the dollar weakens, we could expect to see the stock market continue to go higher. So the dollar showing weakness is adding more bull case to the stock market going higher. So we will continue to monitor the dollar, and we will see if that inverse relationship between the dollar and the stock market can stay intact. Next up is gold, and we do see gold having a short-term bounce as the dollar shows some weakness. Now, we did get rejected at our resistance level on gold, and our next support level is down here at $1,800. So we'll continue to wait on the sidelines. We're not a buyer of gold until we see more clarity on where gold's going. We don't normally look at the Russell 2000, but we do see bullish price action on the Russell 2000 as well, breaking out and forming a new higher high on the daily chart and having that very bullish trend. So the whole entire stock market has bullish trends and bullish price action, and that makes us very bullish on the entire market. Next up is Apple, which is our market moving stock, and we see Apple taking a day to cool off, but still closing above that 5 EMA, and we still have that bullish trend. So Apple actually closed a little bit in the red today, and we still saw the stock market go higher. So that shows that the stock market doesn't necessarily need strength in Apple to go higher, as we saw witness today. And if we do see Apple bounce off this support level and go higher, we could see the stock market continue to run. Next up is Tesla, and we see Tesla barely closing up green today, pretty much flat on the day, but we are still holding up above support on Tesla, and we do still have that bullish breakout of this consolidation wedge, and we do have a bullish trend. So I'm looking for Tesla to come back up and test its previous all-time high at $500. And we'll see if the bulls can break 500 and head higher, or if it's going to act as resistance and get rejected and potentially come back down to our support line. So right now, Tesla's looking very good, holding up above support. And I wouldn't be surprised to see Tesla explode to the upside as if it were a rocket launch from SpaceX. Next up is Bitcoin, and we see Bitcoin bouncing nicely off of our old resistance trend line, which now has become support. And we do see that confirmation bounce in today's price action, closing well up above $10,800. So we're still expecting Bitcoin to come up to 11,000, and we want to see if those Bitcoin bulls can break 11,000 and head to 12,000 would be our next target. If Bitcoin does get rejected at 11,000, we still have support level at 10,200, but I'm going to give benefit of the doubt to the bulls of Bitcoin to break right through 11 like it wasn't even there. So going back to the S&P 500, we do have that bullish confirmation that this market is bullish. And now we're going to start becoming full bull on this market, buying up the significant dips. So if we do get 2 to 3 day pullbacks, we're going to be full buyers of this market, and we're going to control our risk with stop losses below support. So remember to stay objective, follow the price action, and follow the trends, because the trends are your friend. I can't stress that enough. So please remember to help me out by smashing that like button. I really hope these videos are helping you out. And if you haven't already and you want to follow along with all of my updates, go ahead and subscribe to the channel right now. Thanks for watching, everybody. And as always, I will see you in the next episode.